Imagine being offered a city block in Manhattan before steel-framed towers rose, or a handful of Amazon shares in the late 90s, but with a countdown clock running. That is the kind of moment we are standing in right now. A quiet rebuild of the world's money plumbing is already underway, and the doors don't stay open forever. If you miss this, you don't just miss a trade, you miss an era. Forget the noise and look at the wiring. The backbone of global payments is moving to a richer standard called ISO 20022. It's not a coin, it is the common language that lets banks and payment networks describe money with far more detail. Europe already migrated its core wholesale rails, and the United States is wiring its instant payments to the same format. SWIFT has set the timetable to retire the old language and push everyone forward. Why does that matter for blockchain? When money speaks one structured language, the message and the value can finally travel together on programmable networks. Settlement stops crawling and starts arriving in seconds, with instructions and compliance data attached to the asset itself. Central banks and payment firms are piloting tokenized deposits, digitized bonds, and shared ledgers that make reconciliation disappear. The public narrative lags, but the plumbing keeps moving. Washington won't say this plainly, but insiders act as if the shift is already done. Vendors rebuild software around the new messages, banks test tokenized workflows, and payment companies plug into networks that can actually settle. Retail waits for an announcement, but by the time a press release lands, the price of admission usually changes. This is not a story about permission, it is a story about alignment. There are three rails you need to understand before everyone else does. One is a neutral bridge for high-volume cross-border settlement. One is a consumer-focused network that handles the last mile for remittances and cash conversion. One is a rail for trade, finance, and real-world instruments that have lived on paper for decades. I will name them, but first you need the map that makes their role obvious. Think of standards as the street grid, instant payments as the bridges, and tokenization as the parcels of land that bring value online. Once a city lays the grid, the question is not if buildings are coming, it is where to stand before they rise. Right now, ISO 2022 is the grid that lets every institution describe money the same way. The bridges are live, and the parcels are being minted faster than most people realize. When the grid, the bridges, and the parcels line up, a skyline arrives quickly. ISO 20022 eliminates ambiguity with structured fields that machines can read without guesswork. That makes compliance checks faster, reduces costly errors, and invites systems that speak the same vocabulary to connect. When a language is common, networks that can settle quickly become the natural destination for the traffic. Treasury teams see trapped capital shrink when settlement cycles compress, and that is a tailwind you can't fake. Here is the part almost no one outside the industry is watching. As volumes shift to real-time messaging, liquidity needs to be orchestrated across borders without friction. A purpose-built bridge asset with near-instant finality and tiny fees becomes essential infrastructure rather than an investment toy. The firms that move value at scale won't wait for viral headlines. They will use what works and keep moving. When the rails fit the rules and the messages, adoption stops being a debate. At the edge where people actually touch money, the last mile determines adoption. Remittances, cash in and cash out, and low-cost transfers for everyday people are the proof that a network is more than a demo. A rail that connects money service businesses to retail locations and mobile wallets makes the new system real for families, freelancers, and small merchants. If the last mile fails, the future stalls. When the last mile is simple and cheap, growth compounds because behavior changes. Then there is the ocean of trade finance. Invoices, bills of lading, and letters of credit have resisted digitalization for generations. Tokenizing those instruments on an open, fast, and cost-efficient ledger lets banks and logistics firms move documents and value together. When a bill of lading becomes a secure digital token, settlement and title can sync, risk drops, and capital turns over faster. Entire distribution markets can form around those tokens the way exchanges formed around equities. Now, the names you came for. The bridge asset is XRP, engineered for cross-border settlement and aligned early with banking-grade messaging. The last mile rail is Stellar's XLM, built for remittances with cash on and off ramps that real people use. The trade finance rail is XDC, a network tuned for tokenized documents and real-world assets that need speed, interoperability, and low cost. You can watch hype if you want, but these three keep showing up in real pilots and real integrations. Notice what they share. They speak the language institutions are adopting, and they solve problems that exist whether the public watches or not. They don't need a decree to matter. They need traffic, and the traffic follows standards and speed. When messaging grows more precise and payments go real time, these rails are positioned where the flow increases first. The crowd argues about price, while infrastructure quietly absorbs throughput. If you need a mental picture of the upside, don't think tickers, think infrastructure. Early owners of corner lots in Manhattan didn't guess the skyline. They read the grid. Early buyers of Amazon didn't guess which product would dominate. They read the rails of the internet and logistics. The fortunes were built by people who recognized the plumbing before the crowd could see it. That is the level of clarity you want to build here. Being early never feels comfortable. Prices can chop, headlines can mock, and your conviction gets tested when friends roll their eyes. Under the surface, adoption keeps stepping forward. European volumes already move on ISO 2022. Swift routing grows each month, and U.S. instant payments speak the same language. The surface looks slow until the curve goes vertical, and then it looks obvious to everyone who waited. Positioning does not require a dozen bets. Anchor the 3 categories and do the work. For institutional settlement exposure, study XRP and how liquidity routing actually functions. For consumer remittances and cash conversion, study XLM and the partners that turn digital value into local currency. For trade, finance, and tokenized documents, study XDC and the industry groups testing distribution on open rails. Depth beats breadth when the standard sets the winners. Build your own conviction the right way. Read public documentation from payment networks that are rewiring their messaging around ISO 2002 too. Follow central bank experiments with tokenized securities and shared ledgers, and track which vendors keep showing up in pilot after pilot. Look at remittance corridors where cash in and cash out are solving real pain, and watch which trade platforms are digitizing paper flows. When you do that, the noise falls away and the map gets clear. Most people will wait for the skyline to appear before they decide where to stand. By then, the easy entry is gone and the price of a corner lot is set by someone else. You're early enough to choose where to plant your flag and to do it with a map rather than a guess. The only question is whether you act before the doors tighten. Hold that question firmly because it won't ask twice. If this gave you the map you need before the crowd arrives, subscribe now. Stay with me and I will keep tracking the rails, the pilots, and the adoption curve so you can move while the city is still being built.